Good morning, friends. I am C. Hanmantrao Chaudhary. Today, I am going to talk about analysis of Finance Bill 2023. On 1st February 2023, our Finance Minister presented the Finance Bill in the Parliament. Everyone excited about the budgets. Really, this is the most excited budget before the elections. And most of the taxpayer expecting the increase in the slab. In these budgets, the taxpayer got the increased slab. When budget is presented, we receiving the call from our clients. Sir, which is the best options, whether old regime or new regimes? The most of the taxpayer, they are confused with the basic exemptions and the rebate. Even in last year also, there is a rebate up to 5 lakh rupees of your taxable income. In this year, that 5 lakh rupees increased to 7 lakh rupees. Due to confusion in the basic exemptions and the rebate, the most of the taxpayer, they are thinking that up to 7 lakh is my income is not taxable. Actually, they got the rebate, not the basic exemptions. The most of the taxpayer expected the clarification about the which is the most beneficial, whether old regime or new regime. So we are discussing details on the increasing in the slab. Latest income tax slab rates for financial year 23-24, that is assessment year 24-25. If you are claiming the deductions and exemptions, even in last year also, there is old regime as well as new regimes. In old regimes, if you are getting the deductions under section 80C and interest of housing loans of rupees 2 lakh, 80D mediclaims, and any other deductions, if you are claiming, you cannot get the benefit in new regimes. If you are selecting new regime up to 5 lakh, no any deductions. In the same, this year, in financial year 23-24 also, that 5 lakh rupees is increased to 7 lakh rupees. If you are selecting the new regime for getting the benefit of 7 lakh exemptions of your income, means you are getting the rebate, you cannot get any deductions except 80CCH. The section 80CCH, any contribution made to Agniveer Corpus Fund, you are getting the benefit of whatever amount you are invested. For example, if you are invested 1 lakh rupees, you get whole 1 lakh rupees under section 80CCH Agniveer Corpus Fund. That deductions is available even in case of old regime as well as new regimes. In case of old regime, up to rupees 2,50,000, there is no any tax. 2,50,000 to 5 lakh rupees, 5%, 5 to 10 lakh, 20%. Above 10 lakh, it is 30%. This is the old regime. This slab is the individual aged below 60 years. For senior citizens, aged 60 years and but below 80 years, for them up to 3 lakhs, there is no any tax. Again, slab 3 to 5, 5%, 5 to 10, 20%, 10 lakh and above 30% for senior citizens who cross the above 60 years but below 80 years. In case of super senior citizens, who is the super senior citizens? The person who cross 80 years and above. For them, up to 5 lakh, there is no any tax. 5 to 10 lakh, 20%, 10 lakh and above, 30%. If you are not claiming deductions and exemptions, this is the old. If you are claiming deductions in all ATC and income loss from house properties, means interest on housing properties, mediclaims for you, your parents, and many other deductions. If you're going for the new tax regime, there is no any exemptions. The question arises whether government don't want to you invest, whether you don't want to save the money in the form of tax saving. The intent is something different. The new generations, they don't want to invest in like LIC, which is generating lower return on investments. The government giving the free hand to invest you anywhere, whatever you think, you can invest, you can earn and pay tax to the government. This is the object of the government, not the object of don't invest. Because if you are only for tax purpose, you are investing, return on investments, sometime it may be lower than what you are investing in other form of any equity and other forms. So that government thinking, giving the free hand to invest in anywhere. For them, the government also giving the increased slabs up to 7 lakh rupees. They are giving you the tax benefit. There is no any need to pay the tax if your income is below 7 lakh rupees. If you're not claiming any deductions up to 3 lakh rupees, there is no any tax. 3 to 6 lakh, you are getting 5% rebate under section 87A. Only basic exemption is 3 lakh rupees, friends. Above 3 lakh to 6 lakh, you are getting the rebates. Rebates means the difference 3 lakh rupees of 5%. If you are getting 15,000 rupees rebate up to 6 lakh, 6 to 9 lakhs, you are getting 10% up to 7 lakh rupees, means 10% of 2 lakh rupees, that is 20,000 rupees. Total 35,000 up to 7 lakh rupees your income, you are getting the rebate under section 87A. You don't be confused. If your income is, suppose say, in WhatsApp you are forward many jokes. The boss asking his employees, what is your salary? He said, my salary is 7,50,000 rupees. You are not working properly, so I will increase you 1 rupees. Your salary means your salary is 7,50,001 rupees. Due to 1 rupees means 7 lakh rupees, 7,50,000 is your gross income, 50,000 standard deductions. Your taxable income is 7,01 rupees. Due to 1 rupees, friends, you are paying 35,000 rupees tax. This is the jokes how we are received in many WhatsApp groups, and I give suggestion to them. You can invest 1 rupees in your ATCCH Agniveer Corpus Fund. You will get whole 35,000 tax deductions. You have another options. If you are up to above 7 lakh your income, you can invest whatever excess amount. If say it is a 10,000 rupees, you can invest 10,000 in your ATCCH deductions, Agniveer Corpus Fund. You get whole tax deduction. You save the 35,000 rupees tax. How this act is working, I hope you are clear in the slab. So if you are having investment full of investments, ATC full of investment, and you are having a house loans, your interest is more than 2 lakh rupees. If you are having mediclaims and any other deductions, you can go old regimes. If you are having full, not full of your investment, you can choose the new regimes. For salary holders, you can choose old regime, new regime. But for other than salary income holders, once you selected new regime, you cannot go to the old regimes. This is what we discussed, the alternate tax regime under section 115 BAC. The basic exemption limit is 3 lakh rupees and above 15 lakh it is 30%. Another most important changes in the surcharge. Whose income is more than, taxable income is more than 5 crores. For them, previously, the surcharge is 37%. Friends, now it is 25%. It is very best saving the taxation, those whose income is more than 5 crores rupees. The alternative tax regime under section 115 BAC proposed to be applicable to AOP, BOI, and artificial judicial persons. This old regime, new regime, applicable to AOP, BOI, artificial person also. Standard deduction from salary income and deduction from family pensions to be extended to opt for new tax regime. These people also get the benefit of new tax regimes. New tax regime under section 115 BAC proposed to be served as a default regime. Now it is a default regime if you want selected. The new section under section 115 BAE proposed to be inserted, provide the reduced tax of 15% for manufacturing of cooperative society established on or after 1st April 2023 and commencing productions on or before 31st March 24. Previously, this benefit is available to only private limited company who started manufacturing activity and formed the private limited company and started commencing production before 31st March 24. They will get the 15% tax benefits. For cooperative society, this benefit is not there. Now they are extended this facility to cooperative societies as well as if they want to start manufacturing activity by forming the cooperative society, they can get the benefit of 15%. Under section 15 BBJ is proposed to insert, provide that tax rate of 30% of any winning from online gamings. If now the government more focus on the online activities because this is the one of the now the growing sector. Government is always focusing to collect the revenue on the growing sector. Previously, we seen from the 2005 to 2017, the most of the targeted people is the builders. Now it is the online sector which is booming. So government more focus on to collect the revenue on these activities. The gaming of winning from gaming also 30% it is tax. Now it is made mandatory. The AMT is not getting the benefit of AMT if they are adopting the new tax regimes. This is also welcome amendments. Another very important changes in payment of insurance premium. If it is exceed 5 lakh rupees, previously it is exempted under section 10D. Now it is taxable. Suppose if you are paying 5 lakh rupees insurance for more than 5 lakh rupees insurance premium in from financial year 23-24, say if you pay 5,50,000 rupees premium, after 5 years, if you are getting the more than amount what you pay for the premium, that the difference will be taxable in the income from other sources. Due to that, we are seen after the budget, LIC's share is go down. This is the one of the reason because previously it is exempt. So most of the people's investing in the LIC because they are get tax-free income. Now, after the 5 lakh rupees, if you are paying more than that in insurance premium, that will be taxable in the hand of the taxpayer. So that they mostly up to 5 lakh, they are invested in future. They cannot invest more than 5 lakhs in the insurance premium. That is the one of the reasons we seen LIC shares market is going down. To avail the deduction under section 10AA, the assessee must submit a return of income on or before the specified date under section 139(1). This is very important provisions wherever you are getting the exemptions or deductions for a tax benefit. You have to file your income tax return before the due date mentioned under section 139(1). This is very important. If you not file your income tax return within the due date, you cannot get the benefit of this. Section 10AA, it is related to SEZ and export-oriented companies. Those who are getting the tax 100% tax benefit, they should file their income tax return before the due date mentioned in section 139(1). Deduction under section 10AA shall only be allowed if the proceed from the sale of goods or services received within 6 months from the end of the previous year. Within such period, the competent authority may allow in this behalf. This is also very important. The foreign, whatever, if you are export the goods, the sales proceeds should receive within 6 months. Otherwise, you cannot get the benefit under section 10AA. The exemption under section 1022B for news agency is proposed to be withdrawn. Section 1022B, news agency getting the tax benefit. After these amendments, they are withdraw the exemption, though news agency also taxable from financial year 23-24, friends. This is very Good provision. I already discussed section 80 CCH. You can get the benefit, whole amount, whatever amount you invested as a deductions, and you can get in the old regime as well as in new regime, you can get the benefit. Receipt from the Agnivir Corpus Fund by person enrolled under Agnipath scheme 2022 shall exempt from tax under section 1012C, and the new deduction under section 80 CCH, which provides deduction to individual enrolled in Agnipath scheme on or after 1st November 2022. The deduction shall be equal to the amount of contribution made to the Agnivir Corpus Fund. This we previously given the example of 1 rupees invest in the Agnivir Corpus Fund, will get the 35,000 tax benefit. The house this section help to you save the taxes. This deduction is available in old as well as new tax regimes. It's very good deductions for getting the benefit. The proposed amendment with reference to income from business or professions. We are taking very important changes of each heads of income and clause by clause analysis. The income from business and professions, this is very changes in the 43B deductions, because previously, recently we got the Supreme Court decisions of checkmate for ESI and PF deductions if you not paid within the due date of the concerned act. This create problems to taxpayers, because this given effect to retrospective effects, the most of the taxpayer facing the problem, because once the Supreme Court decisions, it's come up to review of the Supreme Court decisions, everyone facing this problem. The same in 43B also, again one clause they are added for any sum payable to micro or small enterprises proposed to be allowed on payment basis. This impacts the businessman definitely. Section 43B specifically allow deductions for micro or small payments. If it is paid only, they can get the benefit. For example, if you are purchased the material, say 5 lakh rupees from the micro or small enterprises, if you not paid within the due date, means if you have the agreement, the due date is the 45 days. If you have no any agreement, the due date for my small and micro enterprises as per MSME Act is the 15 days. If you not paid within the due date, that payment is that expenses is not allowed as an deductions. So for example, if you purchase say 5 lakh rupees on 31st March 2024, but you not paid till end of the 45 days, means if you not paid if you say, pay suppose 1st of the July, in that case the 5 lakh rupees is treated as an income. So be careful from this year itself, you make the habit of paying to the small or micro enterprises in time. Otherwise, you will not get the benefit. This is very, the businessmen face very problem for this section 43B, because it is very challenging for the businessmen to pay in time. If they are not paid, they cannot get the benefit. They can get the benefit on paid basis. If suppose in 23-24, if they are not paid 5 lakh rupees, they cannot get it is as an expenses that is added back to your income. And in 24-25, that 5 lakh rupees is treated as an expenses. You can claim the deductions. But in this year, due to not payment of 5 lakh rupees, you are paying government. Suppose if you are in 30% slab, you paying 1,50,000 rupees to the government. So now you make the habit of making the payment for the small or micro enterprises in time. Otherwise, you are paying tax on that also advance. So be careful. Section 43B is very, very important. Everyone should note in because it is very important. If you not make the payment, you'll not get the deductions. The threshold limit for opting presumptive taxation scheme under section 44AD, it is proposed to be increased from 3 crores or 75 lakh rupees respectively. Previously, for 44AD, the limit is 2 crores rupees. For 44ADA, the limit is 50 lakh rupees. Now, in this budget, they are increased from 2 crores to 3 crores and for 50 lakhs to 75 lakh rupees. But there is one conditions. There should be 95% of the transaction are made in non-cash mode. Means more than 5% if you are doing cash transactions, this clause is not applicable. In that case, you are common under the 2 crore slab and 50 lakh rupees slab. If you are more than 95%, you are doing in digital mode all payment and receipt, then your turnover for presumed to income deduction benefit is 44 AD is 3 crores rupees and 44 AD is 75 lakh rupees. And there is no need to maintain books of account, or you cannot get books of account to get audited. If your all payment or receipt are more than 95%, for them it is 3 crores and 75 lakh rupees. If it is more than 6%, 5%, if you are receiving or paying the cash, for them the limit will be 2 crores and 50 lakh rupees, not 3 crores and 75 lakh rupees. Next, proposed amendments with reference to capital gains. The transformation of physical golds into electronic gold receipt and vice versa, it is not treated as a transfer. Suppose say if you are purchased the gold in digital forms, then you convert it into physical forms, or vice versa. Means if you are purchased in digital gold physical forms, you convert it into digital form. It is not treated as a transfer. There is no any capital gain taxations. This is one type of clarifications from the departments. There is no any capital gain if you are converted from digital good to physical goods. The cost of any intangible asset, right, shall be considered as a nil, for which no consideration has been paid for acquisition. If you are any self-generated assets like goodwill, there is no any cost of acquisitions. It is treated as a nil if you not paid any amounts. The gain derived from transfer, redemption of maturity of a market-linked debenture shall be tax applicable rate as a short-term capital gain. The maturity amount of market-linked debentures will be treated, if you got any income, that is treated as a short-term capital gain and taxable under section 50 AA at the rate of 15%. Another most important changes in capital gain. Previously, if you sold any residential house, if you purchase another residential house of the capital gain amount, whatever you gain the capital gain, you can invest in another house, will get the benefit of full capital gain. There is no need to pay any taxation under section 54. In case of 54F, if you are invest your whole considerations in purchasing the another new house, you can, if you are having not having more than one house, you will get the deduction of 54F also for purchasing the residential house. If you are invested your full considerations, for them also now it is a limit of 10 crores rupees. Previously, the rich persons, they are investing in the some other assets. Again, they are invested in the house. They are getting the benefit of this capital gain. To avoid this, that there is always now it is capped for 10 crore rupees. Be careful of above 10 crore rupees. You cannot get the benefit of section 54 and 54F. This is also very good initiative taken to collect the taxation from the rich persons. It's also welcome provision. We can say they keep the cap on the capital gains, those who are making the tax planning for investing in the house and getting the benefits. In case of joint development agreement with TDS provision, section 194 IC, amendment is proposed to in section 44 to provide that the full value of consideration shall be taken as a stamp duty values of the property received as increased by considerations received in cash or by check or draft or any other mode. In case of joint development agreements between the landowners and the builder, any amounts received in the cash or kind, check or draft, that value is considered for deduction of the TDS. Charitable and religious trust. Dear friends, we are seen from the last budgets, the most focus on the charitable and religious trust. It's a very deep changes in the, I already discussed about last budgets, and also in this budget also there are a lot of changes in the charitable and religious trust. They want to make very organized sector one of the trust also. They are very deeply, they are changing the provisions. The one of the changes is utilization of corpus or loan borrowing by a charitable or religious trust prior to 1/4/21 will not be considered as an application of charitable or religious purpose if the amount is subsequently deposited back into the corpus or the loan is repaid. Suppose say if you are taken loan of rupees 1 lakh rupees before 1/4/21 rupees, and that 1 lakh rupees already applied, means you expended for charitable purpose and you shown it as an application of the fund. Again, you are repaying that 1 lakh rupees to some one persons. Again, you are showing as an application of fund. The government, it is thinking that you are taking the deductions, double deductions, so that now if you are any amount, you are taken loan before 1/4/21, if you are repaying that amount is not treated as an application of money. If you are taken a loan, if you are not repaid or in the within 5 years, and that amount also not treated as an application of fund, and slowly they want to restrict the applications of fund. It's very welcome provision for the religious and charitable and religious trust. The donations made by one trust or institution to another trust or institution shall be deemed to be applications up to 85% of the donated amount. Suppose, for example, if one trust giving donation to another trust of rupees 1 lakh rupees. Previously, that 1 lakh rupees whole amount is treated as an application of fund. Now it is only 85% amount is treated as an application of fund. And another most important changes, the Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Trust, and Rajiv Gandhi Foundations have been excluded from the list of eligible fund of deduction under Section 80G. If you donate to this trust, this fund, you cannot get any deduction under Section 80G. Trust and institutions that have initiated their activity must apply directly for regular registrations rather than provisional registrations. In previously, first you apply for the provisional registrations, then you get the final registration. But it is very good, welcome amendment for the trust. If your trust is already started the activity, you can directly apply for the regular registrations. You cannot go for the provisional registration. That is very welcome amendments for the trust purpose. The submission of applications containing any false, inaccurate, incomplete informations, if any false or malified intention in filing the applications, the Principal Commissioner of Income Tax may cancel your registrations. In order to claim accumulation of income, trust or institution must file Form 9A and Form 10 at least 2 months prior to deadline for filing return of income. This is also very change happened in our compliance procedures, because Form 10 we are previously filing along with the return of income. Now you have to file 2 months back. Suppose our filing of return of income is suppose say 31st October, we have to file Form 9A and Form 10 before 31st August. It's very important for our professional colleagues. They have to file their 9A and 10 forms before the 31st August. What is the Forms 9A? Form 9A is suppose say trust having the donation of rupees 1 lakh. They have to invest 85%, means 85,000 they should invest. In that case, the trust only receives 80,000 rupees. How it can expend another 5,000 rupees? For them, we have to give the declarations 9A. Due to some reasons, we are not issue the money, so that 5,000 we are unable to utilize to meet our 85% target. So you give the declaration in Forms 9A that is treated as a deemed to be applied in that year. The Form 10 we are filing for our accumulated of fund for any specific purpose. Within 5 years, we have to use, we are giving the declaration we are using for that purpose. So we are filing the Form 10. So these two forms we have to file before 2 months of the date of filing of the return of income. We should keep in mind while filing these two forms, otherwise the trust cannot get the benefit of tax. Now propose amendments in assessment and appeals. The new appellate authority, the Joint Commissioner, has been introduced for specific category taxpayers such as individual HUF to speed up the resolution process in appeal proceedings. Previously, we are directly going for Commissioner appeal. Now, in between, they are introduced Joint Commissioner appeal for individual and HUF to speed up their proceedings. It is very another good welcome for the new amendments in the assessment and appeals. The deadline for completing the scrutiny and best judgment assessment has been extended from 9 months to 12 months, starting from assessment year. Previously, it is 9 months. Now they can up to 12 months, they can complete the assessment. Provision has been proposed to empower the assessing officer to require cost audit for inventory valuation before the assessment. This is very, very, again, important changes in the budget. If an assessing officer feel there is problems, there is any error in valuation of the inventory, he may ask the cost audit report. If that cost audit provisions is applicable to that company, he may ask like tax audit and another balance sheet, other documents, he can ask the cost audit report for inventory valuations. This is also very important changes in the assessment procedure. Return in response to notice under section 148 shall be furnished within 3 months from the end of the month in which notice is issued, or within such a period as may be allowed by the assessing officers. You have to, once you received notice under section 148 for escape of income, you have to file our returns within 3 months from the receipt of the notices. For setup and carry forward of losses, eligible startup will be able to set up and carry forward losses incurred during their first 10 years of incorporation, even if there has been change in the shareholding, as long as shareholder continue during the relevant period. The previous it is 7 years, now it is extended to 10 years. Even if there is a change in the shareholding, but the shareholder is continue, they can get carry forward for next 10 years. Again, very important changes in TDS and TCS provisions. The threshold limit for TDS under section 194N has been proposed to raised from 1 crore to 3 crores for recipient who is the cooperative societies. Previously, for cooperative societies also, for cash withdrawal, the 1 crore is limit. If it is cross 1 crore rupees, the TDS is 5% is deducted. But for cooperative society in this budgets, they are given the extra limit for up to 3 crores. They can withdraw. That is the normal TDS will be deducted. If it is increased 3 crores, the 5% TDS will be deducted if cash withdrawal is more than 3 crores for cooperative societies. The TCS for foreign remittance for purpose of under LRS and purchase of overseas tour program is proposed to increase from 5% to 20%. Under the scheme of liberalized remittance scheme, if you're sending any money to out of India, means if you suppose if you're sending money to for educations and education and medical treatment up to 7 lakh, there is no any TCS. The government is monitoring how much you are spending for foreign medical treatment, foreign education, and foreign tour. Be careful. Your all record will be with the government in the form of TCS collections. If you are going for, suppose say if you are going for foreign visit, the cost is 10 lakh rupees. Now, previously the TDS is 5%. There is no any amount limitations, because in case of medical and education, there is a 7 lakh rupees, up to 7 lakh, no TCS. For if you are going for foreign tour for your business purpose or with family, the TDS, there is no any limit for the TCS. Previously it is 5%, now it is 20%. Your foreign tour cost will be increased by 15%. For suppose you, for example, if you are going for foreign tour, your cost is 10 lakh rupees. You have to pay 2 lakh in the form of TCS to governments. Means your cost is 2 lakh rupees TCS and 10 lakh rupees your foreign tour. So be careful, and you have to pay, you have to manage extra 20% for your foreign tour expenses. You can get the benefit when you filing the return of income. You can get the benefit of that 20%. You can get refund along with the interest. There is no problems. TDS winning from online gaming, 30% without any threshold limit, which is already discussed. If the recipient of EPF withdrawal does not have the PAN, the TDS will be 20%. The same for any other case. If there is any no PAN, the TDS rate will be 20%. Section 155 is amendment to solve the TDS mismatch problems. It is very, again, one of the welcome provision under section 155. Previously, most of the government departments, they are deducting TDS in the next year. For example, if our income related to 21-22, the contractor is already disclosed his income in 21-22, but department deducted TDS and shown in 26 years in the financial year 22-23. The income tax rejected that claim because Previously, there is it's not reflected in the 26 years, so they cannot claim. In the next year, 22-23, they are saying you are not disclosed your income in this year, so you cannot claim these deductions. From financial year 23-24, that amendments will be very good amendments. You can make application to the assessing officers for the mismatch. They can reassessment of your previous year income, and TDS will get the refund for that financial year along with interest. It's very good amendment for government contractors. They can get the benefit of TDS. Previously, they are losing the TDS credits. The very important provisions, penalties and prosecutions. Penalty of ₹5,000 will be imposed on financial establishment for submitting any SFT. If you are any wrong SFT you are filed, the 5,000 penalty will be levied. Under sections 271C, 276(2), provided for penalty and prosecution where director failed to ensure that the tax has been paid under section 194R, 194S, and 194BA. This prosecution clause is already there for the other TDS provision also. If you are not paid your TDS within 1 year from the date of deductions, there is a prosecution clause. The department may issue prosecution notice to you if you are not paid TDS within 1 year. The same provisions that is included for new provisions, it is 194R, 194S, and 194BA. 194R is for perquisite, 194S is for digital assets TDS, and 194BA is for online gaming. Thank you so much. If you have any queries related to budgets, you can mail to us. This is my email ID. Thank you so much. We will meet again with new amendments and new discussions. Thank you so much.